Hey guys, today I want to talk about one of my favorite stocks in my portfolio, Facebook, ticker FB. Facebook is a behemoth of a social networking company that owns 4 of the 5 most popular social networks: Facebook, Instagram, WhatsApp, and Facebook Messenger. The company finally hit the 1 trillion mark this year with a current market cap of 1.06 trillion, making it the 6th largest company behind Amazon and ahead of Tesla. Now, if you bought the shares in the beginning of the year, your investment will be up almost 40% year to date. The shares are currently being traded at $376.26. Now, despite its run up, I think there's still a large potential upside at its current trading price. And I'm not alone at this. The current consensus among investment analysts is that Facebook is a buy with a median price target of $425 and a high estimate of $500. I think these targets still underestimate the upside potential of Facebook. Now, before we start, if you enjoyed the content, please consider hitting the subscribe button. Not only does it help me a lot, but also very much appreciate it. With that said, let's begin. Despite the regulatory threats and calls for boycott, Facebook continues to produce incredible operating results. The company's revenue growth for the last 3 years was 28%. In the last 12 months, Facebook had an operating margin of 43%, 51% if we capitalize R&D, which I do with my DCF model. And in the latest quarter, monthly active users were up 7%, and average revenue per user was up 44%. Facebook also has a very healthy balance sheet. In the latest quarter, Facebook had a current and quick ratio of more than 5, well above what we usually look for in a company, and the debt to equity ratio 0.08, the only debt on its books being operating leases. Let's go into my story for Facebook. I expect Facebook to remain the dominant global social network and continue to capitalize on its large user base. The company will continue to produce high levels of growth despite the increasing challenges with ad targeting from regulatory and platform changes. Facebook is focusing more on e-commerce, with its most popular e-commerce offering today being Marketplace. There's also Facebook Shops and Instagram Shops that were launched last year, where brands can sell directly to consumers on their social media platforms. If Facebook can sell more products through its own apps, it won't be so reliant on cross-site user tracking, where most of the challenges are coming from. Facebook's other growth area is through the Metaverse. In the last earnings call, Zuckerberg highlighted that the next dominant computing platform will be virtual reality, and that's why Facebook is investing heavily in Oculus and other VR tools at Facebook Reality Labs. Once this world is built, there's plenty of potential for monetization, including ads, e-commerce, and the potential for a creator platform. Let's go into my assumptions for my DCF model. I assume a 20% revenue growth for the next 5 years. Afterwards, growth will approach the risk-free rate by year 10. Operating margins will approach 40% by year 2 due to increased costs to meet regulatory changes. The tax rate will remain the same for years 1 to 5, but approach the marginal tax rate by year 10. The sales to capital ratio will remain the same as the base year, about 0.9. My calculated cost of capital is 6.7% for years 1 to 5. This would lower to about 6% by year 10. This gets me a fair value per share of $586.69. So at the current trading price of $376.20, I see a 56% upside. With that being said, that's all I have for you today. Make sure to like the video and subscribe to my channel, and comment down below where you think the company should be valued. Thanks for watching, and I'll see you all next time.